So here we go. 7, 6, 5, 4, 3, 2, 1. Let's do this. So, welcome everybody. Hope everybody's having a great Saturday wherever you are, whatever you may be doing. No trade calls, no recommendations. Everybody's sponsor their own stuff. We're here for educational purpose only. Just an informal chat between traders, and let's do this. So as usual, I have no agenda, nothing planned. For me, it's important to try and give back to the community. Over the years, I've watched plenty of stuff on YouTube, plenty of free content. So as I said this year, I'm going to do once a month. I'm going to go through these. So let's get cracking, and I'll try and stay on as long as people have questions. Not a lot of people showing up today. Strange time, I guess. Why you not at the beach? Yeah, exactly. Well, I've got a busy week coming ahead, and I said I was going to do something in the coming days. So this is the only time I could squeeze in. But to me, it's important to get it done. So let's go ahead. Hopefully, we get some decent questions, a good discussion, and people can watch the recording, right? So. Welcome. So first question, is the S&P about to break down for real? Seems to have topped. Now, if I think I know who that is, you know me, I'll probably say it depends, or you have to quantify the question, right? The big question is the S&P going to break down for real now? What does break down for real, right? That's the big question. Now, let's just go through, again, I'm just being toying with you. I'm going to go through the chart here and discuss. So you can see here, basically, if we're looking at SPX, or we can do it on the ES in a second, but you can see we had a fairly ugly close on the weekly candle. Now again, it doesn't mean it has to go down, but usually, right, when you see these kind of reversals on a weekly, look at these occasions, for example. You see that you tend to get some kind of follow through to the downside. Not always, right? You can get these, and then you get no real follow through to the downside. So everything would suggest that the market is heavy and that we're going to see a little bit more of a retracement. Now, when could this get a little bit hairy? Well, I think really here, if you're looking at the weekly, what is interesting is you have, which is, this is the 10-week is an important moving average, right? A lot of people look at this also on a systematic basis. And what's interesting is this is in line with all these previous highs. I hope you see that, right? And basically that's coming around. We'll look at it on the ES. We talked about this number for a long time. So as long as we don't get a day close, weekly close below that level, it's probably just a little bit of a flesh wound, a tiny flesh wound, right? And, for us to get back down there, we've got about 2% to go. And then there could be a lot more downside. But clearly, it's an interesting zone. And even if you look at it on the daily, you've got the 50-day, the 100-day coming into play there. Does that make sense? So you see, you're going to have a lot of structural support and moving. So structural support and moving average support, right? Now, going back on the ES, I don't know why this pointer now is all chubby, but anyway, let's see it. So this is, and I believe we discussed this also in the last Ask Me Anything session we did. We talked about the importance of this 4,200, right? And that remains the bull bear line. That remains the flip the switch level, right? Now, again, we must remember that the market is bid, and there is nothing that says crash. Could we crash? Sure. But the market is not in a crash formation, okay, in any way, shape, or form. That's what a lot of people tend to forget here. So we're still in buy the dip mode. It's just that a lot of people have been used to buying the dip mode being buy down 0.25%, right? So here, again, this could get ugly to me in terms of acceleration of the mood if we start getting traction below the 4,200. But the market has been extremely technical, right? Even on Friday, the action, we had market traded heavy. Then we go overnight session into Friday OPEX, a little grind higher, all the way back to fill in that cash gap with the previous day. Then the selling came back in again, selling all day, closed on the lows, extremely technical, very, very beautiful action. So as long as it behaves like this, it should be fairly easy to read. But, the focus is going to be on right now how we trade around this 10-day, okay, this 10-day moving average. So keep in mind that for the bullish structural case, right, whether that means we get more stimulus, the Fed does more QE, whatever, this could easily correct off those highs. This could easily come back down, 11% off the highs into the 200, and it's not even a mini flesh wound, okay? And it's just a correction inside a bullish trend. It's just that we haven't been used to these. And as we've discussed in the past, when the market trades like on thin liquidity, you get these overnight pumps, etc. What tends to happen is that the market takes these stairs up and the elevator down. So you tend to see these ramp higher on thin volume, smallish ranges, where it takes the market about 5, 6, 7, 9 days to get somewhere, and then it retraces that whole move in 2 days, right? It's just velocity of move that's increasing. And what's important to understand is to keep an eye on the levels and don't get carried away by the commentary. Just let the levels guide you, because the levels are fairly clear here across the board, okay? So to me, again, what's going to be very, very interesting, and remember, we've got Netflix, a lot of other earnings this week. This week, we've got the ECB. Next week, we've got the FOMC. So a lot of stuff going on. So it's going to be interesting. But right now, in the same way as when we were live, we discussed this. If you remember, on the first day of Powell's testimony, the market ramped on some comments in the morning before he actually started to testify, right? And there I was discussing with the group, basically saying, now the bulls are in control. They're running to score a goal. There's nobody in front of them. It's for them to lose it, right? It's for them to lose it. And what happened is they lost the ball. And now that's kind of changed the Momo. And what's happened is that shorter term, you've seen a lot of things that point to more of a correction lining up, right? Was that you start to see the dollar catching a bid, the dollar catching a bid on Thursday ahead of the market really accelerating, the market catching a bid, the dollar catching a bid, especially against Aussie, Kiwi, CAD. Just one day after, RBNZ said, we're going to taper, we're going to effectively raise rates. So that's the first warning signal. At the same time, you're also seeing crude is not holding the pump anymore, right? No pun intended. And that you're seeing gold and silver trading very, very heavy on Friday. And that everything is pointing to, general de-risking, people taking some positions off, raising some cash. The big question is that going to accelerate? But the bulls, in terms of the higher time frames, they're still in control, right? We're only about, not even we're 1.5% off all-time highs. Okay. Now, if you read Twitter and you see the bears, it looks like the market's just dropped 20%. They're taking victory laps, right? Now, again, full disclosure, as the guys in the live trading room know, I'm short ES here, but there's no victory lap, to be taken yet. We're just 1.5% off all-time highs. So what I would be watching going into the week, right, into the week, is how we behave and how the daily closes around this 10-day moving average. If we get a close back above, the market could be tempted to take out those highs. And again, I would not be fighting that move higher, but I would be looking for failures to get short again, but I would not be fighting that flow. But as long as we stay below the 10-day, or you see a little bit of a rally back into the 10-day that gets sold, then you want to likely press the short side for a move back into this 50-day, back into this 100-day, and back into that pivotal level, which is the 4,200. Right? You see how the stick saves came on the 10-day, and again, it's a very good, useful tool. And again, we have to see how this trades and what happens, but essentially that's likely going to be the key. I think, again, the risk is for a move back into the 4,200, and that's going to be the pivotal level. That's going to be the level to watch, okay? Hey, Debbie, awesome. Oh, so good you make it. That's a good surprise. Good stuff, excellent. Yeah, we'll look at euro in a second. So that's the key thing. And you can see it also on the Russell. This is something I posted on the blog. Actually, I think I posted the chart when we actually when the short setup triggered here, but you see how technical this has been, right? Back into these highs, right? Where we lose the 2300, which is our control line, right? We've been using 2300 on Russell, 4200 on the ES, 14,000 on NASDAQ, and YM is in a 35K, 34K range, right? And you can see here, once we lose that 10-day confluence with the 2300, look at how beautiful this comes back. It's coming back into a 50% pretty much retracement of this move from A to B. Confluence with that 10-day gets smacked down, and now it's going back into the 23 extension of the A to B move, and with the 200 attracting in all these areas. Now, this would be concerning if we lose this area. If we lose this area, all these bids don't materialize again on the Russell. I would expect us to see the 2000 mark come extremely quickly. Okay, extremely quickly. So we'll have to see here. Is it time for a Russell NASDAQ pair trade? Which way, right? So I assume you mean short NASDAQ, long Russell. And I guess that really also depends on your time frame. We looked at that intraday. There are a couple of nice tactical opportunities to do that, but it really depends what time frame you're looking at, right? And I would say it also depends on your macro view, your view on how things are likely to behave. Okay, I think that at this stage in the game, where we are now, Russell versus the NASDAQ here, it makes sense to look at that tactically, especially into the opens, right? If you get nice action, it makes sense to look at that tactically. But to me, those would be intraday trades, right? Just very, very, even 5-10 minute holds, 1 hour hold, whatever. If you're looking at it in terms of the bigger picture, I mean, I guess your big question you have to ask yourself is, do you think that the Fed is going to panic, the Fed is going to come in with more stimulus, and the Fed is going to do more QE, and the Fed is going to raise lower rate, try to maybe even lower rates? I don't know what the hell, right? But if that's your picture, because in that scenario, after I would assume a situation where the market is trading very, very heavy, right? And it continues to trade heavy, and all of a sudden you see a little bit of a relief bounce, or kind of Powell comes in and saves the day, you would expect value or YM or Russell, that especially the Russell that is being beat up, to get a quick pop quicker than the NASDAQ, right? So I think it also depends what your time frame is, what your outlook is, but I think it makes sense both. It probably makes sense both on a shorter term time frame and on a longer term time frame. The problem is, if you're doing it on a longer time frame, you really have to pay attention to what kind of news is coming out. Okay, my assumption is that Powell will not budge until the end of his mandate. He wants tapering to be another chairman's problem. So you mean end of his mandate after he gets reelected? So yeah, I think the issue here is just that it's always a little bit tricky to be short NASDAQ into the next 2 weeks with all the earnings. Do you see what I mean? So I would be a lot more confident on those trades, right? You'll take the other, you think he's not going to have another term. Yeah, I honestly, I wouldn't be surprised if he does, and I wouldn't be surprised if it's Brainerd, but I really couldn't care less, so we'll trade whatever happens, but I have no opinion. So again, what I was saying is that it's just a little bit tricky in general to have short exposure on the NASDAQ going into earnings, because especially if we trade heavy here, say a week, plenty ahead of all those Amazon, Apple, etc., there will be a tendency to pump and to cover ahead of earnings. Do you see what I mean? So it's always tricky. So probably, maybe it could be interesting to construct your own basket, taking out the big fangmans. But I don't know. It also depends if you have a view on earnings. But in general, as a general kind of, 10 commandments or whatever, is I'm not a huge fan of having short exposure on the big names through earnings, right? Or at least on the NASDAQ, that's all. Okay, yeah, I mean, yeah. So, but my take, it makes sense to me also that longer term tech is going to suffer one way or the other, irrespective of what the central bank actually does. So I don't mind it, but I'm just being frank. It's not something I have on. It's not something I'm looking to do unless it's a very tactical one into the opens. Okay, so I hope we've answered S&P. I hope we've answered the yeah, but you mean eventually you'll be right eventually on the pairs trade. The problem is you could get a funky scenario, right, where they both rip or they both puke ugly, and depending on how much size you've got on how you've weighted it, right? Because you can always weight it a little bit more on the NASDAQ side or on the Russell side, depending on how bullish or bearish you are. You can get caught off guard, right? That's the problem, is that all the correlations, especially on the pairs trade, there's no free lunch, right? They're not zero risk. So the weighting is important too, that's all, okay? USD CAD monthly looks interesting for travel back to range high. Hey Emma, how's it going? USD CAD. So there are a lot of these trades that are in play here, and we were long USD CAD for a move back into the 200 DMA. And again, I think this was a kind of like gift from the gods trade, simply because the risk, not only what was happening, but the risk was so tight as we were hovering around the 120 mark. I actually bailed on that trade early when we were stalling here, right? So I didn't, it still is very technical, right? Because you see even here, similar to the other ones, it kept on making a series of higher lows. And even here, when it stalled, the 10-day moving average got bought again, and now it's ripped back into the extensions into the 200. So again, this is a key area, a key zone. And again, this will trade with equities, right? This will likely just trade with equities. And especially if crude trades heavy, then, it'll get traction. Now here, I think what you were looking at the monthly, right? So here, I think the big question is, how much is this going to correct? But clearly this chart is extremely bullish, and there is a risk of a move back into, the 131 zone. I think that unless you have a real view where, Powell is going to cave, et cetera, it's hard to start thinking about, 140s and 130s, especially the way the BOC has been talking. So, most likely outcome, and again, this is kind of like fortune cookie telling, whatever, even if we rip, is kind of possibly this. So I would be careful. I'm not a huge fan of the monthlies, but in general here, you have to respect the huge selling that came here, right? Remember, this was a huge, big cyclical top. And once we broke through, number one, no follow through. Twice, no follow through. 3 times, no follow through. 4 times, no follow through. And it got smashed hard, right? So it's really tricky to get long for those highs in my opinion. What I would say is that as long as we hold above this 126 zone, right? Look at it as kind of like a bull bear kind of area. As long as we hold above here, the risk is this continuing to trade back into the 131. If not, if everything turns, this could again just simply be a corrective move in a move down, and we go right back into the 120s. Personally, I think there are far better risk rewards out there and far easier trades and less messy, and charts that are less messy. Okay, so I thought the risk reward to the long side was beautiful around that 120. I took it, I'm out, and I think here it depends. Now, if you're long because of the chart, it's different. If you're long because you're looking for a bigger pullback, etc., I think the risk reward is definitely still on equities rather than crude or CAD. So if you're looking at the chart, that's one thing. If you're looking at the broader picture and for a correction, etc., then I think equities offer a far nicer risk reward. Crude here, crude back to 50. Well, I mean, anything is possible, but that would not be my base case scenario. As usual, I like to look at things one step at a time. And even if you think about, where we're going with the reopening of the economies, with more stimulus, et cetera, the picture is likely to be still fairly favorable for crude and for commodities in general. So I would be more partial to saying that any big corrections or gnarly events that smack commodities down hard, especially gold and crude, but especially crude, are probably buying opportunities. Now, since you mentioned the 50, I would say if I had a gun to my head, I would say 80 prints before 50, right? Or new highs print before 50. So we'll have to wait and see. But right now, again, if you're looking at it here where we stand, this could just be a very, very tight pullback. So I think if crude starts to trade, let me just clear this chart up a little bit. If crude starts to trade back below the 68 area and back below these previous highs, then this clearly opens up the potential for a move back into the 55 mark. But I would need to see it back below this pivotal area. Now remember that especially with ESG, we've discussed this a lot in the webinar, with ESG, etc., all this stuff going on, there's less and less investment in the whole oil space, etc. So chances are structurally prices are going to continue to remain high and stay bid. So it's not a position I would love to have, to be short crude looking for it to come back into 50s. But again, I would trade each chart independently. It makes it much easier, right? But that's what I would be looking at. Thanks for the question, Emma. So euro for Debbie. So it's extreme pleasure. So what's happening on euro? So we've been looking at I feel S&P is in wave 4 of wave 3. Yeah, I don't do waves because, see, the problem with waves to me is it's always I think the wave count is so subjective really that I prefer to look at horizontal levels, but it very well could be. If you just joined, we spent about 5-10 minutes on the S&P at the beginning of the webinar, so just watch the recording because we discussed that in detail. So here, thanks for the question, by the way. So here, Euro, Debbie, our base case is still a move back into the 117 mark. and that hasn't really changed, right? It's a messy zone. I don't know if you're long or short or what you're looking at, but the close was particularly good for the shorts in the sense that if you look at how price was reacting here, basically we had 1 week, 2 week, 3 weeks, 4 weeks, where price, even though you see these wicks probed below this area, the market always closed it back above. You see that, Debbie? So the market's coming in, it's trying, but it just can't get any follow through, right? Then what happened is all of a sudden, right? Yes, we managed to close below that area. So this is not this is a good close for the bears. Again, it will likely depend. And again, it's all the same trade across the board, right? And yeah, all good. No flooding anywhere near me. That's good. Thanks for asking. So this is a good close for the bears, and it really depends what the dollar does, right? That's going to be the key, and what equities does. If you continue to see this risk-off tone with equities staying heavy, then most likely that dollar will continue to firm. Euro will come back into this 117, 115 zone, but the action is fairly messy, especially on the euro, right? Yeah. It's very, very messy. So to me, it's not cheap enough to get long, and it's not expensive enough to get short here. It's either you have a trade or you have to just wait and see what happens. Okay. I think there are far better trades again on the other charts. Silver. I see there's a question on silver. So Delta variant is causing some countries to lock down big cities. Yeah, we'll have to see, right? I think that's a tricky one because who knows? I think the feeling is that people are not gonna stand for another lockdown. We'll have to wait and see. In the same way, I don't know. That's not something we can plan, right? That's something that you have to react to. So silver seasonality is bullish in July, August, but the chart is ugly. Where are your daily, weekly levels given recent price action? So, as always, remember that seasonals are just a guide, right? Again, especially, and also I would encourage you to look at, if you look at the 20-year average performance of silver versus the 10-year, 25-year, 5-year, you can get wildly different pictures, right? So it's also important to, when you compare seasonality, to understand, it makes more sense to me, at least in my humble opinion, to try and compare it to periods where the conditions are similar. If not, you can get very misleading information, right? In general, of course, you want to look at the levels. Now here, to me, silver, we've talked about this a lot, and I think also, you're familiar with this discussion, is that when everything was lined up perfectly to rip, basically, whether it's producers, whoever just said, you can have sold to you can have as much as you want on a pro 28, 29, 30, you can have as much as you want sold to you, right? So this is just not pretty, right? So I think there are a lot of people that have been stubborn on the silver long. And again, remember, silver and gold are very manipulated too. It doesn't make sense to me to want to get long silver unless, it depends. Unless you're saying, well, maybe I want to get long with a tight stop, see if this holds for a move back into the 10-day. Sure. But to me, you're playing in an extremely choppy range, which is not even particularly well defined, right? So is it still holding the bid and looks like maybe it's trying to call? Yes, but I wouldn't be surprised if we see a rug pull here, right? So to me, silver is not cheap enough to buy. It's not expensive enough to sell. And I'm not that interested here. Now, it also depends why you're looking at it, I think I would say that if you're structurally bullish silver long term, to me it also makes more sense to try and have a good basket of miners, right? Because also there you'll get a kicker because a lot of them will also be doing copper or gold, so it makes a little bit more sense maybe. But it's messy. So here you'll get a situation where the bulls are going to say, oh, this is kind of like bear flagging, right? Then some people are saying, they'll draw all kind of patterns, maybe it's a butterfly, a dragon, whatever. To me, what the market is telling me is that dips are getting bought, right? But even when the conditions were perfect, if you remember these spikes, for it to rip, you got a wall of selling coming in, okay? You can also look at some of the volumes that came in. So to me, this is the kind of chart which is a very messy range, and I have zero interest in trading. Now, if we got some news and it's trading and it rips above 30, maybe that's the buy to try and go with the Momo, right? But it's just not that it's not that interesting, right? I really hesitate to talk about miners at all because they can really rip. I mean, just look at the best names, right? Or send me an email. But yeah, I mean, it really depends. It's just some work to go through. You have to do the work for the miners, right? Hey, no problem. And again, you just have to play things one step at a time. So right here, if you take it back down to the daily level here, also, it's, we're kind of hovering in the middle of nowhere, right? See, there's no clear defined area, no clear defined level. I just don't think it's that interesting here, okay? Any comments, any questions, anything anybody's looking at, any chart anybody wants to discuss? Wish. Didn't we look at this once? I mean, yeah, I don't know what to say. Looks like death. I don't know what to say. It's just no, you should. I mean, it's just tricky, right? You've got this whole kind of zone here. I just don't know. I mean, I'd say if it, but I mean, look at the selling. Look at the smackdown, right? Just a messy chart. I mean, it's a single dollar stock. I really have zero interest on these. You're good at maths. You know what happens to your percentages when it's trading like this, right? It's messy. I mean, I think what you'd want to see to get long is you probably want to see it stabilize back above this area. I don't know how big this, but remember, it's just also a lot of people have to dump this, can't hold single digit names. It's tricky. You have to be careful with these names. I mean, here on the bonds, a lot of people. I discussed this actually in the weekly video. A lot of people seem to be dying to have an opinion, and seem to be trading their opinion, right? And that tends to be, in general, the 10-year, right? Either you've got the guys that are saying and the gals that are saying, this is the end. going sub-zero or going to zero, like what happened in Europe, right? There's just no other way around it. And then you've got guys saying, no, 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 this thing is going to rip, catch everybody off guard, and we're going to, it's the end of the world kind of scenario, right? My base case assumption is, especially as long as, use a technical term, right? As long as Powell is pussyfooting around here, I would not be surprised if, globally speaking, this stays in some kind of a broader range, right? That broader range could be 2 and 1, but it just doesn't do anything, right? When you get yield curve control, so I think it's a tricky one, right? What I would focus on is just how the bonds are behaving, right? Technically, and as we've discussed, the trade's been to the upside now on bonds, right? UBs, very technical, just people don't seem to listen. But look at, despite all the smackdowns you're getting, right? Look what's happening. Higher lows, right? Even the last smackdown, we said, this is time to take profit on the longs, but this is just a corrective move. We come back to the 10-day and we're heading higher. So this is a really important week for the bonds, because either you see things maybe stabilize, this top holds, and then the shorts try and come in and try another smackdown. But if we break above here, this could really squeeze, right? And it's a similar kind of action on ZBs, moving back into this area. I discussed this today in a lot of detail in the weekly video. I don't want to go through a half an hour discussion on the bonds here. But this structurally also on the monthlies, ZBs, is a super, super interesting one, right? A super interesting level. Look at the ZNs also. Key test here. Either they get smacked down or that 200, the 135 mark is attracting. And a lot of people panicking on the 5-year, similar thing, right? After that panic, we held and dips getting bought. This is a nice retracement. Move A to B 50%, you see, and it's trying to coil higher. So focus on the levels. I think that makes an awful lot more sense. Okay. Okay, makes sense. Guys, listen, I need to go. I'm going to get massacred. I thought I had a little bit more time. What have we been going for? We're probably going for 45 minutes or something like that. 45 minutes or so. Then also the recordings get really long to upload. I would just really like to thank everybody who came by short notice. Even bigger thank you to the guys who took the time to comment and engage. As always, hope everybody has a great rest of the week, a great rest of the weekend, a great week ahead. And again, if you know anybody that could benefit from this, don't hesitate to share, like, whatever, all that stuff. And we'll see you back next month. In the meantime, I'll keep on posting stuff on the blog and on Twitter, but we'll do another one live next month. Okay, guys? Thank you so much, everybody. All the best. Take care. Bye-bye, guys.